The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 21st day of December, almost wrapping up the year, and very interesting chart. In Barron's, this is the edition going to the 18th of December, so it's the weekend edition. There's an article that says, Happy New Year, a Santa Claus rally? And then it goes on to say, ho, ho, ho. Since 1896, the Dow has gone up 76% of the time from Christmas through the first two trading days of the year. If it doesn't have the rally, then, like in 1999 and 2007, bear markets could follow. Interesting. So we'll see. So far, so good. Market is holding very nicely. The Dow is up 100. Look, here's the E-mini up 10.25. They're kind of in sync. The Dow and the S&P sort of in sync. Actually, the Dow's a little ahead. I usually like to see the S&P ahead. Well, there are 500 stocks leading than just 30. So the 2,698 round number high that was made for 2 consecutive days, that was back on December the 18th, again on the 19th. And then yesterday, we were down at the 2695.50 area, just a tad lower. So far today, we haven't pierced that high. Still, what I said to subscribers when I showed from opening call, when I showed the, and in the den when I showed this particular chart, it shows that the MACD has dipped a little bit, but it's still very good. And the stochastic, while it's lower than it was back at that peak D high that was made back on the 4th of December in the E-mini, is still good at 88%. So as long as I'm looking at that, I'm refraining at least from trying to short the indices. When that changes, I think I have to change. And we've got the 120-minute chart, made a peak C1, C2 double top formation. That's in the Chapman wave. It's a particular technique that I've used for a number of years. And in this particular instance, it worked quite nice. Actually, it was the peak C1, C2, C3. And at 26.98 highs, and we slumped down to the 26.82 level. That's a 16 points. That's a big move. And then, was that the low? I think we took that out. Yeah, 26.79. That was a pretty big move. Now we've had a very nice spike to the upside. And when I said to subscribers in this is the 120-minute chart. Usually it's the monthly on the right. It goes daily, weekly, usually monthly. In this case, I want the 120-minute chart because it's so important on the shorter term. We have a lot of traders either in the den or listening. Make this real easy because the MACD did, at this point when I sent out my missive early in the morning, the MACD hadn't really crossed positive. And I said, if it does cross positive, and if the E-mini is up at about 26, I think I said 87 or 88, then there's a good chance that we will, the MACD will cross positive and it'll go higher. That's what's happened now. But a lot of these moves have been very sharp to the upside and then sudden pullbacks. So I'll make it very clear. At any point during the day, if the E-mini starts to trade below, it can't just dip, and it's just really on the 10-minute chart, it starts to pierce. Let me go to this very short-term chart right now. So here's the E-mini leg, peak G/B, just made at that high. It was made 30 minutes ago. That was at that top of 26.93.75. A break into the 26.95s would be really good action, and a slide below 26.88 would say, uh-oh, most of the move for the day is done. Now we just have to relax and see what happens. Maybe it's the, it was the tax bill. Now it's going to be government, shut down or not. Let's just watch this closely. In the meantime, back at the ranch, the weekly chart is still looking excellent. And if I take this away, you won't be able to see it because I don't have the E-mini futures. They don't ever go back long enough for me for monthly charts. So let me start my prelude here. So the Dow trading at 24,826 has to break above 24,876 to push to another leg up. You can see there's a rising wedge formation. This is going to be a little careful for some type in the shorter term. This is usually not, a rising wedge doesn't usually lead to a major catastrophe to the downside. It just says, hey, whatever the key support level is, whether it's a gap up that you want to fill or the 9-period moving average of 24,626, these are the levels that you'll be watching out for. So we have no position right now in the Dow, other than the much longer term long position from 22,290s via the diamonds. The weekly chart, very strong. Leg D, MACD and stochastic are very good. I've been mentioning the on-balance volume is getting very overbought. It can stay overbought. When it turns down from this overbought level, I have to monitor it closely. Made a peak B in the 120-minute chart. There should be an attempt at least to try to get above that, and that would be the 24,876 level. That would be a new all-time high. I'm not sure. We'll see what happens over the next coming hours. Weekly chart, monthly chart, leg E, very, very strong so far in the month of December. Let's go to the SPX.X. This is the S&P 500 index, SPX, trading at 2689. Hasn't taken out the high that was made. Did I type that in? I especially said I was going to type it in, and then I forgot. Of 269497. What am I talking about? Oh, 269497. Let me just write that in. 2694.97. There you go. Okay, so that's the high that needs to be taken out. I didn't write it correctly. What happened? Did I not get there? We won't take time now. You have to take out the high of 269497 to start another leg up. Good candle today. We're watching it closely. The MACD is getting a little tired, still excellent, but getting a little tired. Stochastic steady at 88%, starting to show a little bit of internal weakness. Weekly chart strong, monthly chart strong. And we'll go to the QQQ now. This is going to be fascinating. QQQ is up 43 cents at 157.96. It needs to break 158.77. If it breaks at 158.77 in the next day or two, and actually punches into and it punches into the 159.50s over the next 3 days or four sessions. That's going to be really good action. It's going to say, let's watch this going into the first week of January closely, because if we're in a leg B or C, that means you can keep going a little longer. So we're watching this. Parameters to watch: 156 is key support in the next 2 days. And in the gold, we want to go to gold quickly. I'll get to the IWM in a moment. You see gold, nice move up, 1.2, just a steady every day. It's making slightly higher highs. I must say it's creeping up. This is good action. The weekly chart is the one that I'm really watching. The MACD and stochastic are just gently improving. They're not doing very much. I think I need to talk a little bit more about it when we get back. And we will be back straight off these important messages. Dow's up 99, S&P's up 9.71. We'll talk about gold, silver, the dollar, the euro, the yen, and of course crude oil and bonds. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So a couple of things. Let's just go through tons of questions coming in, and I'll get to them in the den and the email and whatever, and texting, whatever. But let's just go to this. The move in gold, because it's so steady, up, 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 up. These are 7 sessions of consecutively higher highs, just fractionally higher, but it's allowed the 9-period exponential moving average to go to 1263 as, I wouldn't say key support, 1259 is key support. A break under 1259 says, oh, be careful, that was just a bounce. A punch above the 200-period exponential moving average of 1277 into the 1279.80. It really has to be quite a way above. Says, no, you're wrong. We are moving, and we're moving this ship correctly. This is not a super tanker with a slow move and a rollover, and that's all I'm going to say. I've looked at it, and I'm still. I mentioned that silver is actually in leg B. Maybe it's a peak B. See, it's lagging, and this to me is just a huge clue to say no. So far, at least. Yes, some of the stocks have moved very nicely. If you're in the stocks, you've got huge gains, percentage gains in a very short period of time. That's what happens with low-price stocks. It's really nice. I was considering doing that. I had the so-called buy signal to buy mode in my Chapman Wave methodology. I just didn't want to use it. And one of the reasons is maybe it's a mistake that we are still long the DXY, that is the dollar, which is just doing nothing really since it made that key low at the 91.01 level back in September the 8th. But at the same time, within the context of where gold is and where the dollar is still actually holding well. I'm just letting it play out. We've got our stop in place. That's the way it is. It's moved up quite nicely from the entry point. Big deal. I need to see action. I need to see the dollar by Monday. Monday we have a holiday, of course, Christmas. So by Tuesday, we're looking at 93.80. And by Thursday of next week, suddenly the dollar has a decent rally. Because if it can't do that, it starts to break under 93. Gold will, in fact, have more than just a bounce. It'll have actually a decent rally. That's the way I'm thinking about it. Then there'll be even then there'll be time to get on. So within the context of the currencies, if you look at the EUR USD, and this is really fascinating. Look, the euro dollar currency is kind of stuck here in the 1.18 area for a little while now. The USD JPY, the yen, this is the dollar yen, is actually rallying. It's got a slightly better. It's trying to test its downtrend triangle resistance line. And I would say that has normally been, this is the low that was made most recently on the 27th of November, kind of coincides with the dollar low of the 27th. So why all of a sudden is the dollar lagging, and both the euro and the yen are actually up in their higher ranges of late? So something's wrong with this picture. So I'm going to be watching this very closely. There's no need to hang around in something that's not doing anything. So we'll see what happens with the dollar. Now, what I wanted to say is the TLT is trying to bounce off that 124 level. And have a look at this. When you look at the charts of my currency, my triple yield charts, this is the white one is the 30-year, brown is the 10-year, cyan is the 5-year T-note, yield, these are all the yields. Look at this. Look at the way they've roared to the upside. And this is something that we saw only after the low that was made in July of 2016. I'm going to give this a little time to play out. We have no positions as of now. I would have considered the TBT, except that the move in the TLT was so quick that I thought to myself, okay, if the TBT, which is the TLT is the Lehman 20-year T-bond fund, and the TBT is the inverse, moved up so quickly. I want to see what happens in the technicals, and if the technicals roar to the upside, and then the price stalls, it goes with it, and then stalls, and starts to come back a little too much. In other words, the 35.02, if there's a break under 34.40 in the next 2 days in the TBT, that is short, the TLT, it's the inverse. I'm going to be watching that closely. So let's just leave that for the moment. I want to get to other questions that I have, but I want to first go to crude oil and copper. Crude oil is just right up against this trend line resistance at up 21 cents at 58.30. Made a peak E, and it's just kind of hovering. I drew that circle in to say there could be a trading band. I'm not sure about a stalk leg formation here. But anyway, let's just say a move in crude oil, the continuous contract into the 59.50s says, haha, be careful. I'm now trying to head towards the 60s. That'll be very good action. And a break below 56. It's a 57. It's a 58.31 right now. A break below 57.70 says, uh-oh. Not ready for prime time. Be careful. So I think I've covered those, except I didn't get to high-grade copper, which I think has been. Look at this. This is leg A, leg B. This is almost like a single leg A, because this is just a nominal momentary stop at peak A. Now you're in leg B. This is impressive. This is action that says, hey, if copper is rallying this strongly, it's kind of telling us, probably telling us about some economic benefits that have been going on through different countries and through the U.S. So don't ignore it, and I'm not ignoring it. And that's the reason why the HGX is on my focus list, because it's holding very nicely. This is the Philadelphia Housing Sector Index, holding really well, made an H pattern successful. Now it's trying for the cup formation. This is the area that I'm be watching, because if ever there was an opportunity to short, it depends on what happens to prices of the home builders over the coming 2-3 days. That's where there might be a short going into 2018. Not yet. I'm just holding off for now. One other thing I wanted to show you is, look at this. So within the Chapman wave methodology, we have some techniques. If I can just go here. Yep. In my CD introducing the Chapman wave methodology is a pattern that I call chapter 13, the arch formation and the inside wedge. I kind of started it very early in the whole process of the CD. but I really went through everything else very thoroughly before I did it, because this is purely a mathematical formation. It's like a rounding top, and it's identifying different patterns. And basically what we look at is, you don't even have to know what this chart is. You see the picture, you see these rising prices, two separate things I'm talking about. You try to find a midpoint here, which could be the exact high, and then you get a mathematical formula that says that within the context of the left side number of bars to the right side high, there could be an equal number of bars from that high to the right side, and lo and behold, there was. Look at the way the MACD ran up and then it failed. Look at the way the stochastic started to make lower lows. So I wanted to introduce this concept, 90-degree angles, just for those of you who are fresh to my work. And then I want you to show you something very interesting. This is Bitcoin right now. This is Bitcoin, BTC, USD. Trading at, if I can actually see the numbers, let me get this away. So trading at right here at 15, open, high, low, close. 15, if I haven't moved it, 15,000, I moved it, darn it. 15,503. What I want you to show, if you can see it, let me get this out the way, is that there was an arch to the upside with a peak A, B, C, D. I believe it's a D or an E. And then on the left side, look, if I put my hairpin right there, look, there's an exact left side, right side price time match going to the low that was pierced. I'll talk about that when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, let's get back to this quickly. I don't want to take too much time. I want to say, I had a question about riot and den. These all go together. So Riot is a blockchain. Riot blockchain, I think they have a very tiny percent. Then blockchain actually doesn't matter. Made a peak D, very sharp pullback, touched the 9-period moving average at about 29.76 or something like that, and it's at 31.06. Made a high 3 days ago at 46.20. In fact, there was someone in the den who said, "I'm getting out." At a certain point, got out beautifully. Even though it keeps being talked about as not really the Bitcoin trade that you should be doing. However, it's gone D in the daily, E in the weekly, only a leg B in the monthly. But wait a minute, look how interesting this is. And this I discussed the other night when I was giving a talk to the Investors Business Daily and the Boston Investors Group annual meetup. I showed this chart. I said, be real careful. If I'm not wrong, this is in a leg F to the upside. In my work, especially since there was, in this case, at 3,523, a round number high, that was on the 9th of the day after I spoke. I said, be careful. And then that was the day it made a new high, and then it pulled back, but it held okay. Yesterday, it had a gap down plunge. Today's got another gap down plunge. I suspect that GBTC, this is the Bitcoin Investment Trust, and this is the reason why I said to everybody, don't trade this unless you find that it's at a price after a huge smash to the downside where you're prepared to buy it and maybe hold it for a while and then wait for the Chapman wave, maybe whatever technique you use to go to higher highs, however choppy it is, because you're going to get out, and you give yourself maybe a time. You say, I'm buying it now, but in 3 weeks or 2 weeks or 5 days, if it's higher, I'm out. Or whatever it is, you have a methodology, because this trades overnight in ways that in percentage terms, it's like some stocks trade in a year. They don't even get to those kind of percentages up and down. So it's a leg E in the weekly chart, and the MACD is very strong. The stochastic is good, but turning down. Leg F in the monthly. I would be really careful. I think there's a little shakeup going on. I'd be careful right now about trading these, holding these things. Any stochastic usage is really short term. What I would say is, you could do it as a trade, that's fine. And I'm going to go back to what we were talking about just a moment ago. Here we go. Look at this. So what happened was you got your arch formation. I'm not going to be able to count this. I haven't got it. I just haven't got the time to be able to explode this. But to my eye, there's an exact left side, right side price time match. What does that mean in my Chapman wave methodology? That an arch formation or a lowercase h formation, oops, I keep doing that. Don't do that. That makes the full arch and retests the left side low, in this case the low of, am I going to be able to read that? Whatever it is, the low that was made on the, I'm not able to hold them. For some reason the mouse is just not wanting to hold steady. It moves too quickly. Okay, for that left side low that was made back in December, around about the 16th, it broke it. And my rule of thumb is, if there is a break of the left side low, you have within 2, sometimes it's 3 bars, but usually I like to say that bar or no more than 2 bars later to close above that left side low. If you don't, be careful, because the next rally could be a failure and need a retest of that low. In this case, the low is 15,005, 15,005. And it's trading right now at 15,322. So there's a good chance it's going to try to test that low. If it takes it out, that's going to be negative. Now, that huge volume spike wasn't on the exact low. If it was on the exact low, I would say now there's a better chance that it could hold and have an even bigger move on the upside. It wasn't the low. It was a bar before. That says, no, be careful. This is going to be a testing area going from 15,000, 345 to 15,000. Let's call it 15,000. All right? That's the way I just don't want to show this as an explanation of one of the techniques. And if I don't move this, if you go from there to that low, you will come in at about the price point of the equal left side, right side. That's the Chapman wave inside wedge. Those were techniques 2 Fridays ago. We spent the day practicing and going through. I'm going to get out of this right now. We'll come back to it later. Okay. Now, let's go back to what we were talking about, and we were talking about other charts that people wanted to see. So I spoke about high-grade copper. That was good. Here's what I'm really interested in. within the context of the markets, let me just show you something. You see the IWM, even today, it's just stuck. It has not made that new high. Yes, it can make the new high. It's had every opportunity to, but the Russell 2000 ETF has not done it. And that's saying to me, be a little cautious here. Don't get too carried away. Why? Because although history says that we should, a market that closes the month of September and October positively for the year is probably the market that survives September and October with a pretty good start of November could very well close the year at or near all-time highs. That's my rule of thumb. It's one of the reasons why I avoided trying once again to go short here, even though we've taken like not even 0.5% loss on the last one. I want to remain in the long position, thinking there's going to be a moment. I don't know. Maybe it's at the end of the day today. Maybe it's at the end of the day of Friday a week. At the end of the year and month. I don't know, but I'm getting the sense that a lot of the work has been done, and now it's isolated areas for the subscribers. We focused on the bank area, on the steel area. There are just areas here that are under the radar, and they're doing well. They'll become in the radar when they start to do even better. But in the meantime, the talk and of most of the shows is about Bitcoin, and I think Bitcoin has made some kind of a top that you've got to be really careful about. I don't think it's going to find a bottom right today. It's going to take a little while to find that bottom. That's just my thinking. I'm not trading it. I haven't yet got into it. I just don't feel like being diverted from what I'm really focusing on in the market. So IWM, not so great. New York Stock Exchange. Now, this is going to be very important, NYA.X, and I'm going to cover some of the questions that I was asked. Making new all-time highs as we speak, and this will be BC. It's in a leg. I'm going to call this a leg C. I'm not going to call it a GC. I'm just going to go with a B here and a C. So that was a peak D. This is new leg, not E, but A. That's B and C. The MACD's good. Stochastic's holding well. I think we could get at least a D out of this. And it's a D in the weekly and a D in the monthly. My big concern here is I've got so many monthly charts in Ds and Es. Can I get a brand new buy mode in the weekly charts to start a new move up without a decent consolidation in the monthly charts, let alone the weekly charts? Something tells me we're getting a little too ebullient here, ebullient, and I'm going to be watching this closely. So here we go. Questions that I was asked. Could I look at the XLF? Yes, the XLF is just sideways. It's up 24 cents at 28.13. It's had a really good move. It's kind of consolidating these guys. My eye would automatically grab my oval technical tool, and I'd put it in like this and say, hey, is this going to be a Chapman wave stalk leg formation? And it will be if there's no break before a new high of the low of the 7th at 27.58. Now, what's really important about this is also the pattern that says be a little careful, because you could in fact get an oval formation, a topping formation, and the MACD's weak now, was strong, and stochastic's under 80%. I'm putting this in only to show that there's a possibility of one more spike, but actually my eye says that the financials might be making, at least in the shorter term, an arch formation like this. Basil Chapman, technical arch formation. We'll be back, up 97 in the Dow, up 9 in the S&P.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I was asked about RIG, which is Transocean Limited, and it's trading at 10.20 up 50 cents. This is 5% gain, but it's done that before. The difference here is that there was a slight positive divergence in the stochastic, not the MACD, and it is a very strong 2-day move, a little different to what it did back in October, going to the November going to the December high. But I'm taking this into consideration that the MACD is still quite good in the weekly chart. The stochastic's terrible. So it says to me, there's your trend line. It's just one trend line, and I don't make a big deal out of these unless they're equal in distance, and they're not quite equal in distance. But I do say that once you break above it, that line has to become support. That's really makes it real simple. I've read before where people talk about it and say, oh, that's a major trend line. You take that long-term trend line out, you are going up. I say, yeah, I've seen this breakdown many times before. No, it has to go above, then turn that line within a small percentage into a tremendous support on the next pullback, and then break to another leg up. That would be very positive. So, yeah, I'd say, you know what, if you're not in RIG, it's a risk. But I think it's a risk with a better percentage chance because crude oil is actually doing quite nicely, stabilizing. So, yeah, 10.20. I wouldn't get the full amount. I'd get a small position at 10.20, and I actually probably would have to wait a little while before I even added or subtracted. But the 10.20 would have to have at least a $9.80 stop. That's like a 4% on a small position as a starter. I think that's reasonable. I might have to look at that myself. Now, the next question is, if the price of oil moves up, will it help GE? Perhaps that's what's missing in GE. Look, it's kind of stalled at 17.59. It's up 14 cents. This rectangle formation, it's going to be real difficult to break out of. The MACD screamed to the upside, and the price did nothing. The stochastic is down at 14%. I want proof. I want evidence. I would say between 17.57 and a break above this high that was made on the 29th of November, 1854. So it's like a point higher. You'd be giving up something, but a point higher to me. If you want to nibble here, that's fine for that experiment. But I wouldn't have it. I'd have a stop like at 17.36 was the low. I'd have a stop at maybe 17.34. It's what, 25 cents? Not such a big deal. Maybe a starting point, but I see nothing yet in General Electric. I do see the potential in the weekly chart over a period of a couple of weeks, maybe to start some kind of a decent basing formation. Okay, question I had about XLU. Can you believe this? Look at this XLU. This is the S&P Select Utility Spider Fund. Kaplop makes a high in the 57 peak D in the daily. Alternate count, I did in the weekly. I had this as a peak G/B, maybe a D back in September. Wasn't 100% sure. It went under the 9-period moving average, then had a spectacular move from the 52s to the 57s, and then all of a sudden, it makes that peak D in the daily, tries to cup and make a new recovery high, fails, right shoulder failure, kaboom, 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 boom. Slalom dance to the downside, and then the cascade. The Black Diamond, I've told the story about the Black Diamond, me and the Black Diamond, when I was just learning to ski. Well, I never went much further than learning to ski. Well, let me tell you right now, here I am, I go up with my son. As we hit the top, freezing like in Burlington somewhere, it's -6 degrees. That's on the barometer, but on the thermometer. But in fact, it was a wind chill factor of -100. I don't know, I could barely talk. We get off, he jumps off and he's gone. I look around, gone. I'm looking for the little bunny slope. I go to point my skis at the bunny slope, and there's a little sign that says detour. And it points, and next thing I knew, I was in this other lane, and then as I'm going down, it says Black Diamond. All right, so this is me. This is the XLU. Sitting on my tush all the way down. Boom, boom. And then look at this. XLU goes from 57. Look at this weekly chart. 55s just the beginning of the week. 52s now. Not leg F, maybe a peak F, probably a peak F in the utilities. I think that this is telling us that we've got to watch those yields really closely because something's going on. If you look at JUNK, J-U-N-K, this is the Barclays Spider High Yield Fund. It's making this cup, this lowercase h pattern. It's maybe going to test the left side low. This is going to be important, especially with that monthly candle. So all I can say is that I'm watching the yields really closely. Let's go back to this chart. Here they are in unison, spiking to the upside. I just want to show this chart right here. That's the South African index. They do have some gold stocks in there, but mostly it's the industrials, etc. Almost going to the all-time highs. Isn't that interesting? You wouldn't think so with gold being so poor. And I want you to go to this one where wood, the iShares Global Timber and Forestry, did make a high. I'm going to be watching it to see if it's a G, right shoulder failure, or, I'm sorry, right arm extension, Chapman wave failure, or even a rogue wave, gap up on Monday. Now it's starting to pull back. This is going to be I'm watching closely. And here's the Philadelphia housing sector in has made a peak E. Trying to work there, but it hasn't been able to make that 347.70 all-time high. Very interesting phase we're in now. I think it's selectivity. I think you can start looking at the indexes and saying, okay, what's happening here? And most importantly, I wanted to, the next question was, and I want you to get to that because the question is a repeat of year 2000 to come next year. I don't want to talk, today's Thursday. Let's do Technical Friday tomorrow. Maybe I'll get into that and I'll show you some charts that are really fascinating. The next question is AAL. Let's see, AAL is American Airlines Group. Leg A, B, C, D, E. This is an F, spike up F. But it is just testing, maybe even breaking out the weekly series of lower highs right there. In fact, it's just kind of snuck above it, but it hasn't closed above it. And the monthly chart is only in B. So let me just quickly sum up and say, I think that American Airlines looks very good on a monthly basis. I think the weekly is good, but I would really want to see a close next week above 54.48. It's at 52.84 right now. It's like 2 points. That would give me a little more confidence to say, wow, we've made leg C in the monthly. This is really positive. It is positive right now, but I need that for more assurance. But most importantly, look, the weekly chart, the daily chart, let me just do we're doing okay for time. So here we go. The daily chart is going. For those who are asking about the streaming, the streaming is back up. C, D, and this is an E. It's an alternate account, F/B. I'm just calling it F for now from the way it's gapped to the upside. I'm suspecting that there's a chop, and that we could, over the next 3 to 4 weeks, see that the AAL starts to trade between maybe 54, maybe it gets to the 54 level, but it'll trade between 54 and 50 to 49. This is going to be the range. That's my thinking. In fact, let me put that in, and we'll check it out in 3 weeks' time, somewhere like that, just not too many weeks, something like that. A little higher. You can even test the old high, somewhere near the old high. I'm not sure it's going to get there. That's kind of what I'm looking at. Okay? But it's very good. If you're long, stay long. What was the question there? American Airlines. Okay, and then a quick question as we're going to go out on the IYT. IYT right now, the IYT is gapped up. I went to a D. I think this is telling us that we're getting a little toppy. Doesn't mean to say you can't go higher, but I'm beginning to think slightly lower lows, slightly lower highs, maybe coming up very soon.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, everyone. We're back. Dow's up 105, S&P's up nearly 10. So WFC, as well as Fargo, it's all in the financials. The financials are doing very nicely. Now, this is going to be very important. Here we go. Within the context of what we're looking at, the question came up about the semiconductors. So the SMHs right now are trading down 64 at 99.64. And I've been talking about this for quite a few days now, saying that the semiconductors have had a very nice move, but there's something wrong with the weekly chart that is telling me that this is just a bounce. I won't know whether I'm right or wrong until there's a pullback in the next couple of days below 98. It's at 99.56 right now. Or there is a spike, not just to the 105 area, but to 102. Goes above 102. It's going to this very ugly candle. And we've seen that time and again over the last couple of weeks. Those horrible down sessions in so many charts started to fill in, and they went above it. And that's really bullish. So I'm just watching, and I'm saying I don't see it right now. Yes, I know Intel's doing well. I know that MU had a great report. There are some fantastic semiconductor stocks, but I think they need a rest, and this is a rest period. This is my thinking right now. We'll see what happens. Those are the parameters to watch. Then the other thing is just a real quick thing on the VIX index. And what I'm looking at here in terms of the VIX is running just a tad. It's up 8 cents at 9.80. But I think there's a little bit of insurance being bought right now going to year end just to kind of cover yourself for the next week and a half, week and a day. That's the way I'm looking at it right now. But I am seeing the stochastic running. I am seeing the MACD starting to improve. But the market is the market. It's the other way around most of the time, that the market tells the VIX, the volatility index, what to do, not the VIX. But sometimes the VIX has a little bit of a head start. So I'm watching these things putting it together. Meantime, as I said, I saw that article on Barron's, what was it? I think 78% or 80% since 1887. The market has been up in period Christmas to New. Have a great day. I'll see you later.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.